Well, this is Pat Walker at Mission Winners, and I'm making a video here for Jeff in Australia. Jeff, welcome to the team. And by the way, on a serious note, I prayed for all of you down there in Australia with what's going on, with the fires and everything like that. What a mess. What a mess. Please be safe. Please be safe. All of you. I mean that. I mean that sincerely. Anyway, you ask a good question, and I'm glad you're part of the team. So the question I have here is Western Australia wouldn't watch the U.S. markets live. Actually, you know what? That can be a benefit to you. And here's why. A lot of people see too much high drama when they're watching the ticker symbols and the charts during the day. So here's the solution for you. When you're watching the video, focus only on the chart patterns that are clean and simple, the cleanest and the simplest, preferably longer base chart patterns that have a really clean and simple entry point. Like you've been following me like right here, this one right here. That's simple. There's nothing too fancy about that, okay? Advanced micro devices, right here. I'll slide it over. You can see it's like, man, I guess if it takes across these tops, that'd be pretty dang good thing to do. This one right here. Look at that. Nice, long base. So yeah, if it comes across these tops, look at the volume. Comes across these tops right here, just connecting these in here, cup and a handle, that'd probably be a pretty good thing to do. And it does it. Simple. Now, they all don't work, of course. Nothing does. But I'll share this with you. This is what I encourage. First off, can you do this? Yeah, and I'm not trying to give you a line here. I mean, that would be immoral. No way. But here's what I suggest. When you're watching the key list video and my analysis of the charts, I encourage you, go through and watch the ones that are really clean and simple. And I use that phrase a lot. Look for the ones that are really clean and simple and focus on those. And forget the other ones. Don't do them. Don't do them. By so doing, you will be able to participate in good market moves without a lot of risk. But I'm going to share one thing with you. Looking at this, okay, watch the U.S. markets live. Here's the other consideration I would put up there for you, sir, is let's suppose you're looking at this one. And I'm going to slide it back one day. And you can say, well, I see this. If it takes out the highs of this bar, I'd buy some. So what am I going to do? I'm going to put a buy stop in. Because you might not be able to watch it during the day. And I respect that, given time zone changes and things. So put a buy stop in. Just a nickel, 10 cents above the pivot price, or at the pivot price, because the pivot price already factors that into it, okay? So let's suppose the entry on this is, let's just make the math simple and say it's $17 a share. Put a buy stop in at 17. But now here is the very important part. Put a contingent sell stop in at the same time. You can say, whoa, what do you mean by that? Maybe you know, and I'm not trying to offend you, but I want to explain. You put a buy stop in, and you put a contingent sell stop in, which, if the buy stop is triggered, the sell stop that is contingent automatically becomes a live sell stop. By so doing, you're protecting yourself. So let's suppose we put a buy stop in at 17 to buy it, and you get filled. Put a contingent sell stop in at 16, I'll make up a number, 1650, 1660. If the stock drops after it's filled, you will be out for a very small loss. And that works great. That works like a champ. That's actually, there's times when I've traveled, I've put in contingent buy stops or buy stop with a contingent sell stop to protect myself. It's a great tactic that will allow you to participate without a lot of problem. The last point I'll make for you, sir, is this. Only do this on really clean and simple chart patterns. Really clean and simple entries. If it's fancy, don't do it. Only focus on the ones like this one right here. GSX, that's simple. This one right here, that's simple. Focus on those and you'll be in good shape. I could show you a couple more, like right here. Look at that. I'll make this bigger for you. It's a past winner. Buy right here. Put a buy stop in. Put a sell stop just 50 cents below it. You don't get triggered. And then, this is the other tactic for you. As price goes up, raise your sell stop. Because you say, hey, I can't watch this stuff. You know, time zone changes. Raise your sell stop. You can say, well, how much? After it's gone up a little bit, you know, 50 cents to $1, $1.50, raise your sell stop to break even. Here's the beauty of that. You know what that means? Worst case scenario is you didn't lose any money. That's the worst case. That's a good proposition. As it continues going up in price, raise your sell stop. Don't make it too close. Put your sell stop. This is the 8-period exponential moving average. The yellow line, put your sell stop a little bit below the 8-period exponential moving average. And just raise it as it goes on up in price. If it moves up a decent amount, I would encourage you to do this. If you own 100 shares, sell off 30 shares for a good profit. That way, if it drops, you've guaranteed yourself a profit. Worst case scenario, you made money. That's huge. Do that, and you will be able to adapt to it and consistently make money. And I do stress, only put buy stops in on really clean and simple patterns. If it's a reversal pattern, don't do it. Only look for the longer base breakouts, and you'll be in great shape. Remember, buy stop and a contingent sell stop. It is only a sell stop. That sell stop is only activated if the buy stop is activated. Anyway, I hope that helps you, sir. I thank you very much, and I hope everything's going good for you down in Australia. And please, please be safe. Thank you, sir.